Hey everybody, welcome to the Curzio Research YouTube channel. I'm Daniel Creech, research analyst here at Curzio Research. Great to have you with us. Today, I'm going to talk about Bitcoin and gold, specifically Bitcoin, and why Bitcoin can rise 400% from current levels, and in my opinion, still be cheap. Now, let's unpack that. The Bitcoin versus gold discussion, argument, debate, honestly drives me Florida crazy. And I don't mean Florida as in the state that I call home right now. I don't understand the back and forth, the negativity, the one versus the other mindset. In my opinion, diversification is very easy here. You can own both. You can put some of your money in Bitcoin, you can put some of your money in gold, and then you can have stocks or real estate, anything else on the diversification side. The point is that please do not get caught up in one or the other. And we're going to go over some price performance here and such attributes. Listen, I'm not ready to throw gold out. Both assets are trading near all-time highs, okay? In fact, let's take a quick look at that right now. So here, we'll use some free charts here, CNBC. Gold's trading around 34.50. Bitcoin, this is a 5-year chart. You can see it's up. This is on Seeking Alpha. Let's see, here's another gold chart from FinViz. So really since April, when it broke out to above the 3,400 and then kind of sideways to lower and choppy. And of course, Bitcoin, same thing, moving sideways here, but knocking on all-time highs. And the point is, can both assets continue to perform well? Yes. Okay, why? Because the system that we are engulfed in, our financial system, our global financial system, but really here in the United States under the Federal Reserve, is a inflationary system, meaning the value or the purchasing power of your currency is guaranteed to go lower, meaning everything else is going to go higher in price. It's going to take more dollars to buy the same amount of goods. That is inflation. We've felt what that feels like over the last couple of years as inflation spiked and then has slowly come down. The point is that you have a massive wind at your back, a massive wave of momentum at your back for higher prices in both Bitcoin and gold because of the macro inflationary stance. That's number one. Number two is I'm not ready to throw out gold yet because it's got an amazing history. Okay, it goes back thousands of years. As long as you want to argue we have economic history, I'll argue that you have records and such of gold, and I think that that's incredibly valuable. It is scarce to a point. You talk about there's not an infinite amount. It does cost a lot to go mine it, trucks, equipment, dig holes in the ground, all this kind of stuff, processing. There's a lot of attributes as to why it's used as money, why it's valuable and such. And I enjoy the debate. I love arguing and going back and forth just as much as anybody. However, I want to provide value in this sense. And so my value here is to not get caught up in the emotional of, oh my goodness, Bitcoin's going to outperform gold or vice versa. It's simply to own both. And you can do that through both physical gold if you want to, and then through different, gold stocks or gold ETFs. Bitcoin, you can hold Bitcoin individually, or you can hold it through stocks and ETFs as well. But both asset prices will continue to move higher. In my opinion, they're not going to go in a straight line. You could see pullbacks, but the fundamentals, the underlying thesis of asset prices going higher, in my opinion, especially for gold and Bitcoin, is a no-brainer because of the inflationary system that we operate in. So that is a macro kind of a level view there. Now, let's talk where we go from here with the price of Bitcoin. And again, I showed you, and this is one of those emotional things about investing that I continue to learn, and I want to help explain this to you so that, A, you learn from my mistakes and understand this perspective or look at things differently. That way you can continue to see opportunity. Here's a Bitcoin chart year to date. So Seeking Alpha is showing it's up about 24% year to date. And then you can click on the year here and then 5 year. The point to show you this is that, is it hard to buy an asset, or is it easy to think that you missed the boat when you're looking at an asset that rise 900% over the last 5 years? And the answer is, of course it is. You have that natural feeling, oh man, I missed this, or I wish I would have bought more back then, or man, when so-and-so told me about this back, when I was at the concert or when I was taking a drive or whatever. I understand that. I feel your pain. However, you don't just stop the conversation and act like we don't continue forward. And what I mean by that is, yes, it can be difficult to look at this price, but you want to know and think about it from here forward. And that's what I hope I'm going to get across to you, and why I'm so bullish on this, or bullish on both prices of Bitcoin and gold, but specifically Bitcoin. Now, a lot of you, if you've seen any of our other Curzio Research YouTube videos on Galaxy Digital, one that I'm a big fan of, that's my largest personal holding, I've shared that and been transparent with you guys. And I'm going to share a slide here from Galaxy Digital's recent quarterly report. And the only reason I'm showing this is because I want to put it in perspective on the market sizes or the market caps of different assets. And here's where I get into this simple thinking, simple math of how Bitcoin can rally several 100%, 400% from current levels and still be cheap. And when I say cheap, I mean cheap relative to other assets like gold. So here you see this digital assets value bar chart here from Galaxy Digital. And you notice in the bottom left here is Bitcoin, and they have it at a $2 trillion asset size or market cap. Then you have this 4 trillion is the global market, the global crypto market cap. And another way to think about this is just to go to something like Coin Market Cap, and I'll click refresh here. And so, granted, take these with some salt because values change over time. I want to be transparent, but I'm not trying to say getting caught up in the details. So if I say 117,000 and it's 116,000, or we're using macro rounding numbers here. So on coinmarketcap.com, you can see at the current price for Bitcoin, the market cap is actually about 2.3 trillion. And then you have, let's see, it also shows, so the entire market cap of Bitcoin, of crypto, is up here in the top, about 4 trillion, and Bitcoin is about 60% of that market cap, if that makes sense. So your entire market cap of crypto is roughly 4 trillion. Again, I'm rounding up. 60% of that is all in Bitcoin, roughly. And like I said, so that's a $2.3 trillion market cap. And now going back to the slide here, again, so these are somewhat different. But the point here is that you have, then you look at the next bar chart, and it's gold at 23 trillion. And then we have M2, which is the supply of money and the money supply, and you think of that floating around as 95 trillion. You have global equities, global bonds, and this massive chart over here on the right, the far right, 380 trillion is the real estate market. Now, why am I fascinated by this chart and what jumps out at me when I look at this? You want to look at Bitcoin to gold. And this is where simple math gets me extremely bullish over and during the Trump presidency. Bitcoin's roughly 2.3 trillion. Let's just round up to $2.5 trillion. And we can round up gold to say 24 just to make the math better. The point here is you can go from, and this is just switching over to percentage calculator to show you guys, you can go from 2.5 to 12.5. That's a 400% increase. And if you just pull up a calculator and you round up to 117,000, you can see up here in the top right. So if you do 117,000 per Bitcoin and you multiply that by 4 to see where we're at, if you want to increase the price 400%, you come to a value of around $468,000. Now that's if we're in an environment where gold stays level and it's holding its 23 trillion-ish market cap, and Bitcoin is rallying strong, okay? Now, anything could happen. We could see one asset outperform the other. I simply think both assets will continue higher. So I don't think gold is just going to go flat. I don't have a crystal ball there. I do, but it's fuzzy most of the time. The issue here is, even if Bitcoin rallied 400%, it would roughly be half the value of gold. Does that make sense? So Bitcoin could rally, go up 100%, 200%, 300%, 400%, be at $450,000+ per Bitcoin, and still be half the market cap, or roughly half the market cap of gold, if gold just stays flat. And the reason I bring this up is because Mike Novogratz, CEO and founder of Galaxy Digital, was on CNBC just last week, and a lot of people take the argument or perspective that Bitcoin is digital gold. And so that's where I kind of use these comparisons. Do I think Bitcoin is going to take over the dominance of the US dollar and be the world currency and all that anytime soon? Absolutely not, even if at all. But I do believe, as history is unfolding in front of our eyes, I do believe that it's a new asset class and it's got a lot of staying power and it's got a massive runway of growth ahead, despite the impressive performance it's put up in the past. But I want to encourage you to try to ignore the past performance from a standpoint of keeping you on the sidelines. And you don't have to go all in and leverage everything you got, but you can start buying some and make a plan to start buying some, especially on a pullback. Because guess what? Markets are near all-time highs right now. A lot of momentum for President Trump and trade deals being announced and the tariff still being in the gray area and how much is going to get passed through and inflation and all this kind of stuff. But there will be another moment and cause asset prices to drop. It might be a knee-jerk reaction and a quick sell-off like the April tariff tantrum, or it might be something more prolonged. The point is, despite what it is, or the reason behind the sell-off, it could be an argument over the debt ceiling that's coming up. You could argue about some Supreme Court or court ruling on tariffs or anything, or trade or geopolitics. In one sense, it doesn't matter what that pullback is. The important thing is, do you have a plan and can you add to great positions during those when prices come down? And I would just argue that Bitcoin is going to be one of those assets for a long, long time that continue to have momentum. And again, when you look at it just compared to gold, digital gold, and you think about that, it still has a massive runway ahead and still would be cheap or at least half the value of gold. Hopefully that kind of makes sense on just thinking about the opportunity from this point forward and then still keeping it in perspective. Can you imagine if Bitcoin is over 450,000 and it's still not even equal to gold? I mean, that's a powerful situation. And I think that as time unfolds, as adoption unfolds, as Bitcoin gets integrated and everything else into the financial system, financialized, if you will, I think that is going to be a massive runway. So just one more time, look at this chart. You got roughly 2 trillion, 4 trillion in all of crypto, which is roughly the same there, gold, M2, global equities. Now, when we talk about what's the easiest way to own Bitcoin, there's obviously a couple different ways. You can just you can go to an exchange, Coinbase. There's so many. You can do Gemini, Robinhood. You can buy there's so many avenues you can just buy crypto with, store it either through a hard wallet, something that you just store away, or keep it on an exchange. You can buy it directly. You can buy stocks that are related to crypto. Galaxy Digital is one. They're a big player in the crypto ecosystem. They also hold Bitcoin directly. You have Bitcoin treasury companies. Strategy, MSTR, led by Michael Saylor, is the numero uno Bitcoin treasury company. They are issuing debt and equity to buy more Bitcoin and hold it on its balance sheet. So you definitely get exposure to Bitcoin there, but that's also with leverage. You're not a direct owner of the Bitcoin. You're a direct owner of Strategy, which holds Bitcoin. So then you can look at the different ETFs from BlackRock and everybody else. Again, there you're buying Bitcoin through another exchange. Just be careful and look out for fees. You just want to be aware of what it's costing you to hold those. Again, one of the very most simplistic ways to hold Bitcoin is just to buy it directly and then hold it there. But you also have the stocks and ETFs as well. And then another interesting point that I think to accumulate Bitcoin, or one way to kind of get involved without jumping in with both feet, is to look at using it with a credit card and earning rewards in cryptocurrency. And Gemini has done a cryptocurrency credit card reward system. I believe Coinbase just announced one, but I personally have a Gemini credit card, and you can, instead of earning airline miles or cashback points or whatever, you simply earn those percentages in Bitcoin. And Gemini, I don't know about Coinbase, but Gemini lets you select which cryptocurrency you want your rewards to go to. And they also give you promos. If you spend so much, within a certain amount of time, you might get an extra $100 or $200 in your favorite crypto. So you can choose Bitcoin or Ethereum or Bitcoin Cash, anything you want. And what's wild there to me is because I think that's a great entryway into crypto for a couple reasons. One, you're spending the money one way or another. Everybody, if you just look at what you have to fuel up your car and buy food, if you look at just gas and groceries and you start putting that on a credit card, you're going to spend that money anyway. Well, after, say, a year's time, if you spend a few $1,000s or several $1,000s on those items and you get a small percentage, you can have a few to several $100s in crypto just kind of floating around out there on your reward system and going up and down. And that at least gets you involved. It gives you some skin in the game. If crypto prices really take off, you can see a great return, but you're already using that money in capital. And so now you're just going to have that working for you and get rewarded. And again, if you're doing it towards airline miles or anything else, that's wonderful. I mean, make your money work for you is the point. It's interesting, and I think it's worth your time to look at to make your money work for you in this space as another way to get or exposure and just start stacking, getting some money involved so that you have skin in the game, participate. That's what we want. We don't want sitting on the sidelines and watching all these opportunities. In this case, what I believe is a generational opportunity to just go by. You don't want to wave at those as they go by. You want to latch onto those and help ride the wave. So you got Bitcoin, you got stocks, ETFs, and even your credit rewards program. All right. Love me, hate me, don't ignore me. Daniel at CurzioResearch.com. That's Daniel at CurzioResearch.com. Let me know what you think. Do you think I'm crazy? Bitcoin is going to rally 400% or more and still be cheap comparative to gold? Holy cow. Buckle up, buy, enjoy the ride. We should have at least a few years of extreme. Again, it's not going to go in a straight line, but I'm very bullish on the next few years under the Trump presidency for one reason and one reason only. And I know that he's a polarizing figure and a lot of people may not like him. The paradigm shift that is taking place that happened when the election was won by Donald Trump was a paradigm shift from the government attacking an industry to now helping the industry. And that is what has happened in crypto and is going to continue to unfold at least through the next couple of years as Trump serves out his second term. A lot of the laws and legislations that are getting passed on, in addition to the Genius Act, are going to be very favorable. And then, we're getting way ahead of ourselves here and looking who would be the next president or political party in power. Not that they would completely undo a lot of the crypto legislation, but they could. Anything's open. But that's why I'm saying from here to the next few years, there is a lot of tailwinds, and you want to have some exposure to this space, because when you go from a paradigm shift of a government attacking an industry to helping an industry and to benefiting from an industry, that is something that is going to last several years, and it's going to be a very volatile and rewarding ride. So we've been along for this ride. Please check out other Curzio Research products. You can check out our Wall Street Unplugged podcast, where I get to join the one and only Frank Curzio most every Wednesday. And also we do Wall Street Unplugged Premium. Curzio Research, if you're interested, like us, share us. Thank you very much for listening. And again, let me know your comments, Daniel at CurzioResearch.com. Until next time, cheers.